That we're talking about that we've been tracking for a long period of time. We personally believe the economy, which is growing at around 7.5 to close to about 8 to 9% going forward, and being the kind of market that we have, and with the global turmoil all across, I think India is going to be the growth engine going forward. As much as people have the Nostradamus view of India, I think I personally believe the market is going to be extremely massive. And in line with what the central government is talking about, housing for all. And more importantly, what we talk about is, if you look at the average age of the home loan borrower today, has fallen down from 40-45 to close to about 30 years today. So that gives you that much more the market that you can basically go and source from. And India has close to 800 million Indians less than the age of 35. That's almost bigger than the entire population of the US itself. So you have more and more opportunities for you to bring in the housing. As far as the infrastructure grows, if you look at the office absorption for the last 2-3 years, India is one of the highest office absorption rates, and typically more into cities like Bangalore, Pune, Hyderabad, Bombay, and places like that. And
my name is Ramnath Chanoy. I'm Executive Vice President with Indiabulls Housing Finance Company. We are Indiabulls Housing Finance Limited. We are a housing finance company. We are in the business of extending mortgage-backed loans, primarily housing loans in the affordable housing segment. We are coming out with a retail retail non-convertible debentures which are redeemable. The issue size is 3,500 crores plus 3,500, which means if we receive sufficient oversubscription for the initial 3,500 crores, we will have the option of retaining an additional 3,500, effectively mopping up a total of 7,000 crores. In the issue, we have the issue is open to institutional and non-institutional investors, and as well as HNIs and retail investors. There are differing terms of the issue. It is anywhere, so there are the various tenure options are 3 years, 5 years and 10 years. You can opt for secured NCDs as well as unsecured NCDs. Depending on the tenure that you opt for and whether you opt for secured or unsecured, the rates range anywhere from 8.55% all the way up to 9.1%. The coupon payment is annual, except for in the 10-year option. So in 10 years, you can also choose for opt for a monthly coupon. Yeah, so the issue opens on September 15th. The issue closes on September 23rd. But in compliance with the applicable laws, we retain the option of closing the issue before the 23rd if we receive sufficient subscription. Yeah. So the rate is between 8.55% to 9.15%. For retail and HNI, it is 8.65% to 9.15%.
And what is the maximum limit so that you are going for this subscription, sir?
So it's 3,500 plus 3,500. So totally we aim to mop up. If there is sufficient oversubscription above the initial 3,500, we will mop up to 7,000 crores.
And the last financial year, how is the performance of Indiabulls?
So in FY16, financial year 16 ending 31st March 2016, we grew the total loan assets by slightly over 19,000 crores. We have grown by 31%. Our profits were 2,345 crores, so profit after tax. And the asset quality continues to remain very healthy. So our gross NPAs were 84 basis points and net NPAs were 36 basis points. That is 0.84% and 0.36%.
So for this financial year, so what are your plans, sir, apart from this NCD issue?
I am not permitted to give leading statements. You can refer to our presentation on the website subsequent to our Q1 results. So you will find that for that period also we've grown at a good rate, and we expect to sustain that. So in the period, maybe we can take a cue from how we've performed in the previous period that is covered in the prospectus. So across all key financial parameters, that is balance sheet and profits and such, we've grown between 20 and 25%. We have maintained asset quality in a tight band. The gross NPAs have been between 0.70% and 0.90%, and the net NPA has been between 0.30% and 0.50%. A key indicator of the health of any lending company is capital adequacy. So against a regulatory requirement of 12%, our capital adequacy was 20%. Our net leverage, which is the amount that is borrowed divided by our shareholder funds net worth, our net leverage was only 4.6%. A lot of our industry peers you will find at much higher. Was 4.6 times, not percent, 4.6 times. A lot of our peers you will find are north of 8-9 times. We also operate with a good amount of cash on the balance sheet. The period ending June 16, we had about 15,400 crores of liquidity, so cash and liquid investments on the balance sheet.